Well, good morning everybody. Welcome to Stockradar Stocks and Move for another week. Today's date is the 14th of December 2023. Christmas is beckoning. Aren't we excited? We've got all our Christmas presents, I hope. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, well, exciting times at the moment. The overseas markets are booming, our market's catching up. So I'll take a look at all that today. Remembering our focus is breakouts, trends, momentum, and the forgotten aspect of trading, but probably the most vital, which is risk management. And in trading tactics this week, I'm going to talk a little bit about that, some aspects of it, just to help you along the road in there, just to give you a bit of a guidance of some of the things you can do to manage that risk. Okay, first off, we're going to go to the top 10, and so we've got this week. Okay. Well, Cochlear is booming. Okay, who cares about price levels? It's gone from $240 to $300, nearly $300 in a couple of weeks, so it's booming ahead well. We've got Dicker Data, which is still doing nicely. Magellan keeps surprising on the upside. Super Cheap Autos broken to new highs. Revel Group's doing quite well, that consumer discretionary area, which we're watching closely. Car Group's fine. Then we've got Insurance Australia, James Hardie, SVW and West in there as well. So it's a good group of top 10 stocks there for you to have a look at. Okay, so firstly what we're going to do is get into the overseas markets, and we'll go straight to the Dow Jones Industrial. Firstly here we've got it. Okay, so now it looks like we're breaking to new highs, as you can see here. We've got to confirm it by the end of the week, but we've had a powerful move up from the 32,000. We're now above 36,000. We've got some good volume attached to it. We've got some momentum. It's above the average, so it's a very structurally sound move by the look of it. So we would think this is quite promising for further moves higher at this stage, especially if we confirm it with a break higher this week. Okay, we've got the S&P, looking pretty similar, hasn't made new highs yet, but it is very close. Okay, 4766 is a high there. We've had a good week this week. We've had a very powerful 1, 2, 3, 4, 5, 6 up weeks, all an excellent volume. Momentum starts to catch a wave there, which is good. So we're now starting to get that push higher and that momentum strength, which we really like to see with the indexes. Okay, Nasdaq is not that dissimilar. It's moving above that recent high at R1, which had topped out in July this year. It's now pushed through there. Again, we've got the volume there, we've got the momentum, and it's now starting to look like it's going to challenge R2 up at the highs there, which would be fantastic for everybody. We're tired of the last couple of years of going up and down, and we are ready for a nice swing higher, and things are looking fairly good for that to happen at the moment, especially if the interest rate cycle is going to start waning, and we're going to see a bit of easing there. Okay, so we go back to the commodities. Unfortunately, not such a rosy picture. We saw copper try to have a bit of a rally here, a bit of a break of the downtrend line, and the moving average really has come to naught so far. We've got a big selling week last week. It's come back down again, so there's probably more work to be done there to reverse this. We do have a constructively high low there, which is good. So it may just be a bit of bumping and upping and downing a little bit before we get back on our road to an uptrend there. But copper's had a rough ride. We had a fall down here. It struggled up here for a long time. It's struggled down here, lower lows, lower highs, and now we're going to get back into this area again, which it's not going to just pass through very easily, I think. So Dr. Copper, for the moment, we just have to wait and watch that. Really no direction there. Gold broke higher, came straight back again, and we had a big selling week last week again, so not such a happy camper there on gold. Really was looking very promising break there initially, but a reversal of the last 2 weeks has brought us back to earth fairly quickly, so we just have to be a little bit patient with gold, and I'm really not doing much there at the moment. I might hold 1 or 2 of them, but not really doing much at all at this stage. And of course, Brent crude, it dribbled all the way back to this support level. It tried the break up here, and it's failed again now. What we're looking at here is a fairly serious situation where this here is a very heavy selling here. Momentum starting to turn negative. This S1 is under threat. The only good thing about that is we're getting cheaper oil prices, which is probably good worldwide for the economy. So that's probably a positive for the stock markets in the end, looking there. So that's Brent crude. So that's your commodities. Okay, we go to our market. Now we're sort of a bit behind the 8 ball here. We've moved sort of in a trading range, you can see there, for a couple of years, and we really have struggled to break out of this range. We're going to make another attempt. Whether we can get through or not, I just don't know. It's certainly looking strong at the moment. Momentum's starting to turn a little bit, not positive, but it's starting to turn, saying the selling pressure is over. So really that 7629 level is going to be key for us. And there's plenty of highs here for us to break through. So I guess the negative is it's going to be hard. The positive is if we get through it, that's a very constructive sign. So when I've got 1, 2, 3, 4 highs like that and we break through that, that's good. If it was just 1, not so good, but 4 there is really quite important to break through. So those all-time highs there up at 7629 are vital we get through there, and it'll be very promising if we do. And we have some constructively high lows here, a bit like the we saw in the Dow there, some slightly higher lows off that point there. So quietly confident here that we're going to see a move towards R1 at least for the moment. Okay, so that's the commodities and the ASX 200. Now I just want to have a look at the stock pick count, which is really flat still. So we're still, what we've got at the moment is we've got some good stocks there running. 22 of them are running pretty nicely. No real triggers this week, but we've got a lot of potential moves higher at the moment. So I've got quite across the board a lot of stocks just waiting to go bang at the moment. So quite exciting for me because there's a lot there, a lot for you for members to have a look at. When you have a look on the site, you can see a lot of those areas, stocks that have moved into that, from that red zone into the grey zone and looking ready to move into the green zone on the trend intensity scale. Okay, there are still only 17 stock picks of 161, but we do have a few leaders starting to look a bit better there, which is helping to raise this index. I mean, CBA is getting back up towards its high, BHP is, so they're two big stocks that have really helped the index move a little bit higher again. Okay, so that's the stock pick count. The portfolios has really not a lot of change again, so we really are just marking time again this week. This is an exciting week, is what we've seen overseas, but we have really marked time a little bit on the portfolio because not a lot of change apart from the fact that they're now all, apart from the conservative portfolio, which still only has 3 out of 10. The other 5 stocks are all full. 5 stock here, all full. They're all 100% equity, so we are ready, set, go on those. If the market moves higher, we've got some good stocks in there like Cochlear that are moving higher quite nicely, and things like Stockradar, those sorts of stocks that we saw in the top 10 there. The Energizer 10 is 7 out of 10, so we've picked up a couple more there. Still looking to add a couple more if we can. So that looks pretty good. The accumulation index is 8.6, so I don't know if you've been able to achieve 8.6 or not yourselves, but passive indexes would have. But we can still outperform those ones using our stock picks approach there. So as you can see on the scale there, and our 5 stock portfolios there down the bottom really have endured this last 2 years more than anything reasonably well. So we're looking for those to pick up as well if the market moves high quite quickly. They are full and ready to go. Okay, so let's go and have a look at a few stocks now. First off, we're going to start with Breville Group. Okay, now we saw the insurers run, we've seen the builders have a bit of a run, and they still are, like CSR, James Hardie, going quite well. And I'm seeing a few of these consumer discretionary stocks, which I'm going to focus on in the newsletter this month, the end of this month, because there's some exciting things happening there. Really, the consumer is opening his wallets and looking fairly interesting. So it's an area to watch for me. And Breville Group is one that, although it broke high and struggled there for a couple of months, it's broken high, it held its stop, and it's now making new highs. And if we look at the chart as to what it says now, we can now see that it's now above the moving average. The volume is starting to pick up nicely. Momentum's really gone to maximum levels as the lines switch above to positive. And we've also now got a new high making there again. We've got to confirm this by the end of the week, but looking very constructive, and trend intensity is 10 there. So we've got a very nice, the downtrend, we've got the accumulation pattern we like, which puts a good base below the rally. And now we're seeing a developing uptrend here with a fairly reasonable wave of selling here, but it now seems to be the buyers are coming back there. Again, a little bit tentatively, but as we see these indexes start to make new highs, we're going to get a bit of confidence return to some of these things. So Breville Group is certainly one that looks like it may well continue higher for the moment. Okay, so the next one we've got is, well, surprise, surprise. And I'm showing this again because, you just don't know when trends are going to go. And the important part of what we do is minimising our losses. When we're wrong, we get out. But when we get on a trend, we've got to hang in there until it finishes. until it tells you. Magellan just keeps going higher and higher and higher. I think we're up 25, 26, 27% there at the moment. And we can see here the trend reversal down here was beautiful. It was on the volume, we had some moving, the momentum kicking higher and went above the average. So that got a trend intensity pretty well at plus 10 to start with. Since then, it's continued higher the whole way. Remembering we always get these things in a rally. They're always going to be this phase where we're going to have a pullback, and you can worry about them if you want, but unless you have the evidence that your stop has gone off, you don't worry too much about it, okay? It's purely a challenge to the sellers, to the buyers. Every now and then the sellers will come in and have a go, and they did here, not really all that strongly, but you can see the wealth of buying has just pushed this market higher and higher and higher, and we're now above 192 at 192 as of yesterday. Good volume, so we're just following this trend higher and maximising the potential of this trend. Okay, so that's Magellan, which we've been in for a while. Okay, Fortescue, which I did talk about, I think last week or the week before, as to how it was looking very promising. We've had a little of a stepped process to this one. The first step was for it to get through this area down here at around about $23. It did that successfully. The next step was to break to an all-time high, which it has done. Now, trend intensity rating, this is as of last Friday, a +2. We haven't confirmed yet. We need to confirm this break higher, but it will then get a very good trend intensity rating if it confirms the break high. So we've had this high lows here. We've got these steps here, 1 step, 2 step break. Volume has been okay without being wildly bullish. Momentum is good. So on the weight of evidence, we have a really good picture here for Fortescue, and iron ore has been very strong. One of the commodities that has been very strong. So Fortescue looks good to me. You know, it's as long as if it closes above here this week, then that's a very bullish sign for Fortescue. And having had a fairly big correction over the last 1, 2, 3 years, we could see a nice little run on Fortescue. Okay, so keep an eye on Fortescue. It looks like it's going to go for. Okay, we looked at Cochlear before, and you can just see here, again, the price levels are irrelevant. Whether it's $2.40 or $2.40 or 24 cents, it doesn't really matter. So we've got from 240 to nearly 300. It broke to highs here. It's now kicked higher. Volume okay there. Maybe a little bit of a shortage of stock situation here with Cochlear. So it goes higher very easily. As sellers don't really engage with the buyers. The buyers just have to keep bidding the price up to move the stock higher. We've got very, very, very powerful momentum here. Let me just blow this up a little bit for you so you can see a bit better. Okay, we've got very, very powerful momentum, good volume, above the moving average, and we've seen a nice break above the old highs here, which it was below for a long, long time, since about 2020. So it's been 3 years there. It's been sitting below there just over 3 years, and it's now broken higher. And we're seeing that what we often see with an all-time high, a good market imbalance where the buyers overwhelm the sellers who are pretty well vacant at the moment. So that's what Cochlear looks like. It's very strong, and some of our portfolio clients have got into that one. Okay, now I just want to talk a little bit on the negative side, not negative, but just a bit about managing risk, which I'm talking a bit about today. And I talked about the insurers, which have done quite well of late. And QBE, we know, has been taken off this bottom here. We got into it in November 21. It had a good rally, but since then it really has struggled for quite a while to get above to about $16. And now we're starting to see this starting to wane. It's gone below our stop, and the sellers have started to hit the stock. So there's really, for us, there's only about 13 to 14% profit there in 12 months, but still, that's something that's okay, especially in this market. But it's also just a matter of recognising what's happening here, and we can see that the probabilities are now starting to wane that this may well not continue higher. If it breaks to new highs, we can always buy a new high if we want to, but for now, I want to protect the profit that I've got, manage my risk, because the risk is now moving towards the downside. As we can see, all these big, long candles here with the sellers have just whacked it down again, and now we're starting to see break below these lows here, which is not a good sign with good selling, and the momentum has almost gone out of it. So again, probabilities and managing risk are two very important aspects of what I do, and it's a profit. I'm going to lock it in and I'm going to move on, and that's what we do with our stocks. Okay, so there's a few stocks for you to have a look at. There's plenty more on Stockradar, as I say at the moment, looming on some resistance levels, looking to trigger some buyers sitting there. So get onto Stockradar and have a look at what we've got there. And I just mentioned the stock that I showed you last week, Data 3, a little one that's out of my remit, out of my 160, but it's an exciting little stock. And it's broken a big resistance level, which I showed you last week, consolidated above there, and it's now broken higher again and moving up, and we can see very good volume, excellent momentum above the average, trend intensity rating is plus 10. There's nothing to do but follow the price higher with your stop. Okay, so that's the sort of stocks I've got for you today. I'm quite excited about what's going on at the moment. The stocks you can see there that are moving higher are doing quite well, and there's plenty more, as I said before, on Stockradar. Okay, so that's so now I want to go to trading tactics briefly and just talk a little bit about that managing risk that I was talking to you about. Just as an example, there are just three ways we manage risk. For example, so one is our stops. That's a simple way of managing risk. So it protects against losses, and it also protects you from losing your profits, like QBE. We won't let it go. We would rather get out and move if it makes a new high, but we just get our stop and we get out when it gets hit. I focus on the ASX 200. It's a much lower risk profile than the smaller caps. The smallest caps, it's a risk-reward thing. You want to play in the small cap area, you can, but you need to know what you're doing because the risk is quite high. The stocks can move 10 to 15% in a day sometimes, or in a week. So it's very hard to move the bigger stocks in that way. So I just play in that area because it's a risk management thing. Most of my clients run their own superannuation funds, and they have to be very careful with their money. So the ASX 200 is one. And the other thing I do is simply follow the trend. Okay, I don't just say everything I'm going to buy willy-nilly. I follow a trend. It's evidence-based, it's process-driven, and we know trends occur in the markets all the time, and so that's what we do. We just simply follow them. So there's just three ways that if I focus on those three things, it's going to make sure my risk is managed to a certain extent. Okay, example, another one. You can do why buy a stock going down? Because there's always a question, don't catch a falling knife, all this sort of business. But the reason you don't is you don't buy and hope a stock's going down, because the chances are it's not. You wait for the evidence to appear of a turn, of buying, of support, all these things you've got to wait for, and price that will help you there. So you wait for the evidence because the probability is that it will fall further. So, that's why we sort of wait for things to happen, some buying to appear, things like that, because it's nice when a stock falls 10, 15, 20, 30, 40, 50%, but it can also fall 60, 70, 80, 90%. And we saw that in previous falls, whether it be COVID or the GFC, these things can happen. So just be a bit careful about buying a falling stock. And there are many other ways like these ones I'm talking about to control your risk and manage it to make sure you are safe in this market, because that is the most important aspect of trading. You can have all the buy signals you want, but making sure when you get out that you're minimising your loss and protecting your profits is key. So managing risk always is very important. I'm also talking about behavioural analysis, because I look at price all the time, and I'm going to talk about in newsletter next week a bit about the importance of, or the what's the word I should say, the decreasing importance of fundamentals and the increasing importance of behavioural analysis and the way our markets behave these days. So that's in the newsletter. I'd put an article in there at the end of December for that, which will be an interesting article for you to read, because markets are changing and the way we behave is also changing. So it's interesting to aspect some major players have changed the way they are approaching the market. Anyway, managing risk is the most important thing for us. So don't try and be overly smart and go for the glory and say, if it's down 50%, I'm going to buy it and hope like hell it's going to go up, because it probably won't. It'll probably be down again the following week. So be sensible, be controlled, take control, and be a winner. And that's basically what you got to do. So it's all about being smart when we're trading, and not trying to use our egos or go for glory, and so we can tell the next guy that we made $1 million and this or that or the other thing. Inevitably, you probably lost it. But anyway, that's the way it is. So it's just it's quite almost a boring thing. It's just a matter of what you do and how you approach it, and being very, very calm about it, sensible, poised, in control, all those things those words that I use all the time. So managing risk is absolutely vital. It's probably the forgotten aspect, but it's probably the most important aspect of what I do. Analysis is a very small part, 10%, of what I do, getting in, and then it's about managing that risk all the time. Okay, so look, that's all I've got for today. Exciting times ahead. I'm looking forward to seeing you all next week and seeing what we've got. But stay safe, respect your trends, listen to your stops, and I'll see you all next week. Thanks very much.